Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES pushed to a marginal new high, and overall, the buy side has been dominant and in control in the overnight session. Looking at the other markets, we're seeing a similar situation with the Russell holding above its 1230 high volume node. Now in the Russell, on the upside, if we can get a breakout above 1232 to 1234, then that could drive the S&P higher as well. So heading into the open, we have to understand that the buy side is in control, but at the same time, the market is at resistance at an important short-term inflection point, and we are going to need to see broad market strength and some upside momentum in order to get a sustained breakout. And if we can get that, then ES can test 89 to 91 and potentially 93.75 to 95.75, at which point the range of the day would start to get exhausted. On the downside, if ES is holding above Friday's high of 21.83, then that would also signal that the buyers are continuing to be in control, and we could balance a bit, but eventually still make a new all-time high. Below that, we have the previous close and the previous VPOC at 80.25 and 79, and then the main support area on the day is 75.25 to 77.5, and we're also going to use that area as the short-term bull bear zone. So as long as ES can hold above 75.25 to 77.5, then we could still be balancing in a range and eventually still make a push to a new all-time high. So right now we are going to give more preference to the long side because buyers are dominant on multiple time frames, and the only time that we would consider shorting the market is if we saw some very clear-cut signs telling us that there is some major underlying weakness or some very clear lack of strength in the market here, because like I said, we are going to have to see broad market strength, participation from the other markets, and sustained upside momentum in order to continue pushing higher. Now, as far as the momentum part goes with the NYC tick, we don't necessarily have to see some major values on the tick. So we don't have to see tick extremes in order for the market to continue going higher, because this is a lower volatility and lower volume environment. So even if we're getting plus 600 or so on the tick, that may be enough to just slowly push the market higher. This is not a high volatility environment, so we can still get directional movement without any major momentum to the upside. But as long as the tick is holding above zero and we're seeing at least around plus 500 or 600, and then the other markets are participating in the upside move, we could still slowly make our way up into 89 to 91 and even 93.75 to 95.75. So from a location perspective, initiating a new long up here is obviously relatively risky, and we do need to see that momentum at least a bit to continue moving the market higher. But at the same time, you don't want to short a very quiet market either. You don't want to short it simply because it's trading near the all-time high, and you may think that it's trading above value, unless you see some clear signs showing you a lack of strength or a failure in one of the other markets or downside momentum. It's going to be risky to short it because you may not get much out of it. Even if the market doesn't go significantly higher, it may not go significantly lower either. That's the challenge with trading a lower volatility and lower volume environment. It's just that overall there is lower opportunity in the market. So the only thing we can do with that is to be more selective, to be a little bit more careful with timing the setups, timing the trades, and if nothing else, rely on good trade location. So for example, if the market is just slowly trudging higher and there's really nowhere to get on board, then from a risk perspective, it's better to let that one go rather than initiating a long at a unfavorable price where you may not really be able to sit through the trade and actually see it through. So even if we're going to initiate a long, you still want to lean on something. Friday's high 21.83 is something that the market can hold. So for anyone who's initiating a long at these higher prices, their stop loss has to be behind 2183 at the very minimum. So identify where the stop loss has to be, and then based on that, figure out what a good enough entry can be. But if that means missing it because you're not getting good reward to risk because of the smaller ranges and lower volatility, then like I said, it's better to let that one go rather than trying to get involved and then scratching it or taking a small loss and then getting back in and taking another loss. So just focus on the higher quality setups. And when it comes to that, there may only be one or at the most two on the day time frame because of the lower volatility and lower volume. So those were really the main ideas heading into the day. How the market responds to 2183 is going to be a short-term signal, a bit of a tell. And then, like I said, the main support is 75 quarter to 77 half. If that area doesn't hold on the downside, then that would be the beginning of a shift in the underlying short-term control. So if 75 quarter to 77 half fails and doesn't hold, then from there we can quite easily go down and test 2170. We can fill the 72.75 gap, and then the next area of decent support is at 66 half to 68 half, and that would still be an area where buyers can be active, and the range of the day would also be quite exhausted by then. So the expectation is for the market to hold the initial support zone, and if it's really strong, then it could even hold above 2183. So right now, our short-term bias heading into the market is neutral bullish, where we are giving more preference to the buy side. We understand the buyers are more dominant, but at the same time, we understand what we have to see in the underlying environment in order for ES to continue going higher. And absent the broad market strength and the upside momentum, we can still struggle up here. So those are the main ideas. Let's see if the market can really hold above 2183. That'll provide a short-term signal to establish our bias. And let's also keep an eye on the other markets and the Russell. And right now it's holding above 1230, which is a good sign. And then if it can break out above 32 to 34, then that would be a confirmation that buyers are stepping in. So those are our main ideas. Let's see if the buy side can maintain control, and we will take it from there.